Ticker symbol LULU is down over 20%, and today we'll be deciding whether this company can be an undervalued play or if it's a value trap, because recently this company has actually recovered its profitability with a 73% increase year over year in their net income and consecutive quarters with stable expanding net margins. So today we'll be looking at none other than Lululemon, a sportswear provider. In their annual report, they state that they're principally a designer, distributor, and a retailer of technical athletic apparel, footwear, and even other accessories. If you've never heard of Lululemon, you can just think of a Nike or an Adidas, but targeting a more niche, more premium segment. They basically, as stated, offer performance apparel, footwear, and accessories which are mainly designed for people running a healthy lifestyle. These are mainly tailored towards activities such as yoga, running, or anything else that implies being active. During 2023, their women's range represented around 64% of their net revenue, while their men's range represented only 23%. That percentage that is in the middle represents accessories and other footwear which are not categorized into any of these two segments. And a very impressive part is that the Americas actually accounted for over 75% of the revenues of this company, while mainland China only accounted for 10%. However, this mainland China segment had been growing at a rate above 30% year over year for the past 3 years, and I believe that in 2023, their revenues in China actually grew at around 70%. Now the thing about this company is that they mainly sell through company-operated stores, so you will see this walking around the street, and very similar as Nike, you will find them on the best streets of any given city, where they have over 700 locations globally. They also operate through their e-commerce, and they even sell to third-party retailers. Now you can see that this business model is practically the same as other giant companies in this industry. Nike, Adidas, Puma, they all operate in a very similar way. However, Lululemon's products are generally tailored to that higher, more premium segment, as not only the prices are a lot higher, but the quality of the garments is supposed to be a lot higher as well. And this company gets incredible when we look at their financial analysis. They have a 46% return on capital employed. Now, just to put this into context, we usually look for companies with a return on capital employed above 15%. Then they have an interest coverage ratio of 100 times, meaning that they won't have to worry about debt anytime soon. And they have a cash conversion of 71%, which we generally like to see this a bit higher. And finally, they have a gross margin of around 60% and a net margin of around 17%, both of these above the thresholds that we usually have for these values. Now, when we look at their financial evolution over the past 3 years, we can see that their revenue growth has been slowing down, despite it being pretty consistent, but the main thing that I wanted to focus on here is how they actually managed to rebound from a bad 2023. You can see that starting on January 2023, their net margin actually took a big hit, and the margin stayed constant at around that range up until December 2023. After this quarter, they rose back to prior levels, and they even increased. These margins have been maintained at around that level for the past 4 quarters, and it would be great to see Lululemon keep maintaining these margins or even raise them consistently. However, this does raise a flag of what happened in 2023. Because if this happened once, it could happen again, and the market did not like that move. Now, when we usually look at efficiency ratios, we always comment on the fact that these generally follow net income, which is exactly what we can see over here, as the efficiency ratios dropped significantly in 2023 and January 2024, they just picked the pace right up, and especially return on invested capital, which is the metric we like to focus on from this slide, stayed pretty consistent and has been rising consistently ever since. Right now, sitting at around 50%. And when we look at their balance sheet analysis, I love to see that their assets have been growing at such a fast pace in comparison to their liabilities. Because despite them actually taking on more debt, they're increasing their asset base by a way larger percentage, making their current ratio actually move in the positive direction, allowing those investors which are generally more conservative to consider this as a pretty good investment. And when we look at their fundamental analysis, this company currently gets a solid 6 out of 8 ticks, starting of course with their low liability risk as we look from their interest coverage ratio of above 100 times. Then they have a very solid balance sheet as they can pay all of their short-term liabilities only by using their current assets. And what I like about this company is that it is managing to grow its free cash flows in an organic fashion, which is mainly being allowed by that great organic revenue growth and that margin expansion. By organic, of course, we generally mean that they don't depend or need mergers and acquisitions in order to improve their top line. Next, it is great to see the evolution of shares outstanding from this company because they're actually decreasing every single month, meaning that this company is using their free cash flow in order to reward shareholders by conducting share buyback programs. But now if we focus on the two most important factors from this slide, which are pricing power and the existing mode, I believe that Lululemon meets them both. On the pricing power side, this is one of the most premium companies in this market. They're managing to grow their revenues, to grow their user base, to expand internationally, and all of that by having a pricing point which is above Nike's pricing point, which is already quite high. They have done this by offering a more premium brand, by offering a better quality of service, and by offering better quality of the products themselves. These are longer lasting and in theory are supposed to feel better. One thing that's for sure is that they're trending. But the great thing about this strategy is that it allows the company to keep maintaining a high price point, meaning that all of their customers and all of their repeat clients know that they could be finding those products at a much better pricing point if they went to other companies such as Nike, Puma, Adidas, or other of their competitors. However, despite having that option, they still decide to pay a premium and buy Lululemon's products. This means that their customers are way less elastic to price changes, meaning that they're not as sensitive to price hikes, which gives Lululemon the ability of raising their prices at a rate above inflation for a long time period without generally losing too many clients. And now when we focus on their competitive advantage, I do believe that this company has created something huge. They have a very respectful brand, which is premium and has a high loyalty. However, since they operate in the sportswear segment, the leadership in this industry changes extremely often depending on what's trending. So I believe that currently they have a moat because they're the best at producing the products that are trending right now. However, maybe in a couple of years some new trend emerges which is very different to Lululemon's offering and a new competitor just comes in. The thing about this industry is that the entry barriers are extremely thin. So Lululemon could experience a similar fate than what Nike or other competitors have faced, where you think that everything is going well, but in a sudden change of plans, your revenues start dropping because your products are just not fashionable anymore. Now, on the other hand, I did not like that I don't actually find their cash flows consistent. These are growing and they're very good. However, it would be very difficult for anyone to predict what their cash flows would be in the following month. And last thing, they're not currently paying a dividend, which I believe they could actually be doing so and improve their shareholder return overall. Now, when we look at their valuation, we can see that they are actually trading way below the average price-to-earnings ratio of the past 3 to 4 years, currently trading right under a 24 PE. And if we look at their free cash flow yield, which is 3.9%, this is way above the long-term inflation rate of 3%, which does suggest that this company may be undervalued. Now, when we look at the risk and possible challenges, I mainly see, well, of course, the worsening competitive landscape because of what I mentioned, that this industry has no large barriers to entry. So there can be an infinite number of competitors and many of them which are creating new trends which could actually come in, revolutionize the market and do what Lululemon just did and start to take market share away from the leaders. And the second risk that I do see is the cyclicality, because I believe that companies which are pricing their products at a premium, especially products which are not needs and are wants, will be the first kind of products that customers will actually start to spend less on whenever there is an economic downturn. Because if you're having financial trouble, instead of going to Lululemon and maybe buying a shirt for $200, you are a lot more likely to either not buy the shirt at all or just go to Nike or a discount store and buy it for much less. So now before we move on, please remember that I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that this company has a strong competitive advantage for the market that they're currently in, and that they have a very high return on capital employed, meaning that they know how to create value for the investor. However, I'm not too happy at the fact that their cash flows are not consistent nor predictable. Despite that, I do believe that Lululemon is a good company and that it may actually be a good investment. However, there is currently high uncertainty regarding their earnings, so we will have to see how this plays on from here. Having said that, thank you for watching as always. This has been the Cashflow Compounder. Join the free Patreon for extra content, and I will see you on the next one.